Hello and welcome to the Nasdaq Dorsey Wright podcast for the week ending on June 6th. My name is Ian Saunders and I am joining Miles Clark. Miles, good to be back in here with you.
I know it's been a few weeks, I think.
It
Last
has.
year or last week I was down in Florida. I think you were traveling as well.
Yeah, but you did the podcast from Florida. I was
Well,
down in Florida too and I couldn't pull it off. So that was
it's just why they pay me the big bucks. I'm
that's I
I'm
guess
always
so. That's
available.
true. Yeah, it was good. I was you were down there in Florida, got stuck because we had another water crisis in
Yep.
Richmond, I think. And I know there were some jokes about that on the podcast last week, so definitely be sure to check that out.
Yep, we do have drinkable water here.
Thankfully, I
Yeah.
hope so,
Yeah.
at least.
Well, we'll see, I
Yeah,
suppose.
we'll see. We're recording this Thursday afternoon after market close. So we're starting a new thing this week to take a look at a little bit more focused view of market movement. We're going to go through five charts. So the five charts, five things, charts being a loose term, but five charts that we think kind of highlight some major action or major events going on over the course of the past week. So some of the charts we're going to look at the dollar. We're going to look at some small cap stuff. We're going to look at Poland. We're going to look at QQQ.
Right.
But maybe the most important event for us, at least, over the course of the past few weeks is a chart, maybe several charts, what we call the research hub. So, Miles, what is the research hub?
Well, like you said, I mean, way to start off our five charts with the thing that's not a chart. It's actually a research.
There's a lot of charts on there.
There are certainly a lot of charts, but for you listeners, as you are familiar, or maybe you're not familiar with Dorsey, right? What we are is we're a technical research shop. We put out research, great research, I may add, every single day. And so the research hub is essentially a new landing state that conglomerates research, all of the research and great work that we do, whether it be in-depth research, individual stock call-outs, fund call-outs, whatever that is, and it puts it together in a new, fresh kind of modular layout, so it can really help you focus on instead of a full-length report, 20-page report, which we typically put out. It essentially breaks it down into little bite-sized chunks so that you're able to really focus in on specific areas that you are interested in.
Yeah, absolutely. I mean, so important thing to note is the daily equity report that we've had for years, not going away. You
Yes,
can still
thank you
get
for
to that.
clarifying
You can
that.
click on the daily equity report. It's the same report that it has been for a while. We always go through some changes, update with the times.
Yeah,
The report's still there. And so definitely can still access that. But the way I think about the Research Hub is if you log into any news website, right?
right.
Everyone used to get the newspaper delivered at their door. And then all of a sudden, online became available, and you could go in and get the newspaper online. When you go into any website, there's an online version, and you can click a little link that says print version.
Right.
I think of the daily equity report as the print version for a report. It comes out at the end of the day, aggregating information. The Research Hub is like the web version. It has more live updates. You don't have to wait the end of the day to get commentary.
Right.
That's a really important thing to note. So, like, for instance, we haven't published a report yet. We're recording this at 4:10. The pulse for today, Trevor's talking about crypto. It's already in there on the
Right.
Research Hub. So you can go in, you can see posts in a more live format. As soon as we write it, as soon as it's published, you can see it right there. You can also look at things from an asset class perspective. So we have the asset classes broken out by strength in the Dolly rankings. But if you click on the asset classes and that asset class research, you can go into specific research for consumer discretionary or
Yeah.
technology or large cap value or whatever area that you might want to dive into. You can click on the corresponding area and bring up quick content pertaining directly to that
Yeah.
asset classification.
That's a really good point because one thing that annoyed me, I'll say that, I think I can say that, about the way that that the daily equity report was laid out was that if you were trying to research something about industrials, but we hadn't put anything out about industrials for, a week or two, or something wasn't on our featured list of stocks or whatever it is, it was kind of difficult to go out and like actually find content about a specific group. Now, with this new layout, it's all right there. All you have to do is click. And like you just mentioned, Ian, it's going to have stuff that is updated intraday, and it'll always be there for you to actually go and find that specific group you're looking
Yeah,
for.
so don't want to make the whole podcast a sales
Yeah,
pitch, but it's not a sales pitch because it's free.
right.
So if you're interested in coming in and taking a look at it, you can definitely take a trial the same way you would before. You get a 30-day trial, but there's a foundation offering that's available there, which gives you access to content on the platform for free, no charge. So definitely be sure to check it out if you haven't already. DorseyWright.nasdaq.com. Okay, chart one out of the way.
Yeah, there you go.
Okay, on to chart two. Chart two, as mentioned before, we are going to kind of go through a few different areas. The first chart that I think is, or the second chart, first actual point figure chart that we're going to take a look at is the US dollar, which does not update on an intraday basis, but by the time this comes out Friday morning, tomorrow morning, the chart will have updated and we're going to be at new low or new multi-year lows. Is that right?
Yes. Yep. We're going to post a bearish triangle there to get some pattern lingo in there. That'll be our fourth consecutive sell signal, the very first four consecutive swings since late 2022. And like you just mentioned, new lows there for the greenback that we've seen really over the past few years. So we're certainly in a weakening dollar or falling dollar environment. And that's got an impact on a lot of different areas over the last few years. The dollar's kind of made a liar out of us, as we typically say. The dollar tends to trend. It hasn't done so for the last few years, but again, we're kind of building up another opportunity for it to kind of fall back into historical averages of consecutive signals in one direction or the next. Trends or ultimate negative trends, positive trends, will be meaning something. Right now, we're in a negative trend, so that's
Yeah,
what we
negative
expect.
trend continuing to fall lower. Like you said, multiple consecutive sell signals. Another pretty interesting thing to note is that we're not oversold. So when we first got this big downdraft in March, April, dollar fell 10% off of its high. We got down to that chart level at 98.50, which is where we're going to be tomorrow morning, right?
Right.
That we were about 100% oversold on an end of week basis. It's very rare for the dollar to get that oversold. It typically tends to consolidate after it gets into any extreme territory, overbought or oversold.
Right.
And we saw that consolidation play out in a classic triangle pattern, right? Consolidated right around that 100 point, broke lower, and now we're only 40% oversold as of the market movement through Wednesday. We'll see. It will probably be a little bit more oversold than that tomorrow. But it's I guess that's to say it's just because we're at relative lows, we're not necessarily in a washout from a trading perspective for the dollar, right?
Right. I think that's also good for comparison as well. I mentioned before, the last time we posted four consecutive sell signals was late 2022. You go back and you look at the actual distribution history, or the weekly overbought oversold history for that, we had gotten down to about -80, which would be in heavily oversold territory.
Mhm.
So again, comparing the two, back in 2022, we were oversold. We saw a little bit of the kind of start of that range. Here in 2025, four consecutive sell signals breaking past that multi-year support. We aren't yet
Yeah,
oversold.
and we were earlier, and that's the important thing. We
Yeah,
didn't go down and then snap back up,
right.
right? It's not like we snap back to a buy signal. We just consolidated right around the 100, which I mean, it's kind of natural. So you would expect that to happen for something that it is in a clear downtrend, like the dollar. So the dollar being in a clear downtrend does have some tailwinds for a lot of different asset areas globally. It
Right.
doesn't really affect U.S. stocks as much. We've done a lot of work on this where looking at dollar falling, rising and falling dollar regimes, which
Right.
we classify as every time the dollar moves 10% off the bottom, it's in a rising dollar regime. Every time it falls 10% off the top, it's in a falling dollar regime.
Right.
Clearly in a falling dollar regime now. And it's not saying that it's only going to do 10%. It's just a way for us to categorize the different regimes. When it's in a falling dollar regime, equities can do well, they can do not well, like US equities perspective. It
Mhm.
doesn't tend to affect it as much. Certainly there's some outliers in there where extracurricular market events happen and,
Sure.
and things happen, right? But it does affect definitely international equities more. It
Right.
affects commodities
Right.
more, right? We haven't seen the effect play over on the commodity side, maybe as much as you would have expected. I think a lot of people historically, when the dollar was falling, crude oil would have done a little bit better.
Right.
Now that we're a net exporter of crude, I wonder how those effects kind of play out throughout the marketplace. We'll maybe leave that conversation for a different time.
Right.
But on the international equities front, certainly has affected and led to some consistency from a lot of different areas. Is
Yeah.
that fair?
Yeah, no, I mean, we've hit on this really throughout the last,
Yeah, it's
in
not a new theme.
2025. Yeah, this is international's been hot, hot, hot. I mean, we talked about
Here's the
the
title right there.
yeah, international's hot, hot. Yeah, it's like the bongos, like from The
Right,
Office,
right.
feeling hot,
All right,
hot,
you don't
hot.
need to sing. That's it.
Okay. But you look at, we've mentioned international momentum with some like a widening spread
Right,
from
right.
Europe, developed markets doing particularly well. You look at the Dolly rankings, European representatives in the first the first and second position underneath the hood. So yeah, I mean, this is an area where, a falling greenback or a falling US dollar, that makes international goods and services a little bit cheaper in comparatively, right?
Yeah, and that you bring up a good point. So within the Dolly framework, there's a breakdown within regional different regions within international equities. And you mentioned that Europe was in the top two. A lot of people, I mean, maybe myself included, before I started covering international equities, don't typically think about two kinds of European
Right.
equities. But there are. There's developed Europe, which is what most people think about. And there's emerging markets in Europe.
Right.
There's markets in Europe that are classified within the emerging market space, going to be some constituents within like EEM or stuff like that. They're just not nearly as big as most of your China, your Brazil, your big emerging market areas. So we talked about this much,
Yeah.
but there are definitely some areas of strength. Poland is one. We can add on some others, like Greece
Yeah.
doing quite well. Austria is another, but looking at Poland specifically,
Here's our third chart.
yeah,
If you're keeping
third
track at
chart.
all.
iShares MSCI Poland ETF, EPOL is the ticker. It is up over 44% year to date
Right.
before the market movement on Thursday. Near perfect 5.86 fund score. Moved back to a buy signal in April, continued higher, kind of pulled back a little bit right to the middle of its trading band. Only 24% overbought with movement through Wednesday. I mean, that's a good looking chart.
Yeah, no, I mean you only real gripe would be is that we are a ways away from traditional support. But
Yep.
just like you mentioned, I mean there's going to be a clear line in the sand there. You got the 50-day or the kind of the middle of the trading band and around that 29 mark. That's also some old resistance right to where we're
Hmm.
pulling back into it. So, Europe and international equities in general have cooled off a little bit. But it's actually been to a pretty logical old resistance point in a lot of these cases. And so there's a pretty attractive picture developing as you've pulled back a little bit, but the technical long-term technical picture is still very attractive, I would say.
Yeah, and I almost think of that consolidation a little bit, or expected consolidation moving forward. You can think like kind of like the inverse from what the U.S. dollar does. The U.S. dollar moves into oversold territory and consolidates. You would expect international equities move into overbought territory
Right.
and consolidate. We're
Yeah.
seeing a little bit of that consolidation, a little bit of a back off. Poland, for example, is down about 1.5% intraday at the time of this recording. Not even a column of those reversal down the chart,
Right.
right? So there's some room for it to pull back a little bit, and still honestly probably present a bit more actionable trading area for those that are interested in doing something with it.
Right. And I'll actually offer this, and then we can jump away from the international equities. I mean, as we sit here, we're about halfway through the year. International equities have certainly, done very well, at least in comparison to domestic equity representatives. A lot of people, you look at a fund that's up 45% so far this year, you're like, well, why would I go and look at Poland where we already missed the boat on that? Like, you got to go find somewhere else. Momentum is built on exactly the opposite of that statement, where you're up 45%. That doesn't mean that you can't go up 70. That doesn't mean that you can't go up 80. I'm certainly not making that call right now, but that's the idea that momentum is built on. It will buy something when it doesn't necessarily feel comfortable to do so because you feel a little bit late, but relative strength and trends can persist longer than it perhaps feels comfortable. So
Yeah, no, and that's an important point to note. I mean, stick with the trends. That's why we have the charts,
yeah.
right? And when we're looking at trends across other areas, I think one of the more interesting areas that we'd look toward, or you put a feature in the report yesterday on Wednesday about this. We're looking at small caps. We've seen a pretty interesting picture. We've talked about a break in IWM returning to a positive trend, but especially when you look at some of the different areas within the small cap space, especially on the momentum side of things, kind of a unique layout right now.
Very unique. And I want to start off the commentary by, you know, looking at absolute pictures on their own can be somewhat deceiving, right? Because you look at IWM, and IWM is not our fourth chart, but I do want to maybe just
Yeah,
put
we're
it out
not
there.
pulling that chart up.
Not pulling the chart up, but you look at the default chart for IWM, which is the Russell 2000 representative. It moves back into a positive trend. It's up about 15 or so percent, 16% or so off of those 2025 lows so far. All of that on its own is very constructive, right? But you go and you compare that to large cap representatives, and things are, really haven't improved, right? Large caps are still by and far head and shoulders away better than small caps are. And you take a look at the momentum within small caps. It's been actually a relatively productive period off of 2025 lows for high RS small cap names. So that you look at the top quintile or top
Decile, I
decile,
believe,
excuse
yeah.
me, the top decile here on that chart we're throwing up right now. That decile is, your high performing small cap names. They've actually done relatively well, but the actual spread between the leaders and the laggards has not improved. The reason for that is that the laggards within small caps have also done very well off of the bottom. So again, if that starts to clear up a little bit and the laggards go back to lagging and leaders keep leading, the momentum picture within small caps actually becomes very favorable. But we haven't seen that actually happen yet so far off of the bottoms.
Yeah, and it's something that's not that is relatively typical when we're seeing bounces, right?
Right,
I mean, that's where does momentum not do well? Bouncing, rallying off a low.
right,
Where we're small caps in a clear low.
right,
Consolidation triangle pattern, bounce higher from the broader IWM space. We've gotten the whole space moving higher, but it hasn't been as great for momentum because, like you said, the laggards are the best performing area and the leaders are second best,
right,
right? And so the expectation would be that unless there's a clear leadership shift within the small cap space, if the leaders do remain relatively consistent or they're given enough time to adjust into new leadership that might be in the laggard space, we could see momentum continue to the process work
right.
within small caps, right? So either of those two routes could lead to productivity from the small cap space moving forward. And it's not that's normal. It's normal in small caps. It's normal, and it's even more normal in small caps probably than in large caps because they
Right.
move quicker anyways.
Yeah,
But we've been waiting for small caps to do something for a while.
for a while.
I feel like every time I talk about it, I talk about that meme with someone like poking a stick, like, come on,
Yeah,
do
do
something.
something. And then
Like
it does do something
it's
just
doing
for a
something.
second.
It's just it's doing something. It's just not consistent. Yeah. So I mean that'll be an area that we can look for some maybe some consistency as we move through the summer. Will
Right.
be a pretty interesting area to look toward.
Well, and I'll tell you this, if we do ever get it, I mean, the technical backdrop, and what we're doing is just looking for, extra troops to join the battle. Large cap names, the kind of core of the market, the S&P 500 has been doing relatively well. It feels kind of odd to say that, saying that we're, roughly flat for the year for the S&P 500. But you look back 23, 24, 2023, 2024, core of the market doing very well. Small caps really just floundered that whole time. If we could even get any support from small caps, markets broaden out quite nicely. Things could really turn on, but they haven't quite yet.
Yeah, I think it'll be pretty interesting to note. I mean, there's a conversation around there within the are small caps ever going to be good again because so many companies are waiting so long to IPO.
Right.
You would expect if the IPO window does in fact start to open up more. We saw like CoreWeave launched. I think it was or had a relatively good IPO. I mean, some other areas,
Relatively.
yeah, some other areas that have done decent over the past couple of years. If that starts to pick back up, maybe some other companies won't wait as long. Maybe
Right.
they'll start to come back in. On the other hand, too, we have some potential tailwinds from maybe more acquisitions
Right.
that could lead to higher acquisition prices for some of these small cap names, right? So there are a lot of potential positives. They haven't come to necessarily come to fruition yet. Maybe they're starting to, but we kind of got to wait to see how that shakes out. So if there is going to be a broader rally in small caps, it's definitely in the early stages, I
Yeah,
would say. Is
I
that
agree.
fair?
Yeah.
Um,
I'm just checking because I know that Broadcom was supposed to come out, so I didn't know if we
all
had
right,
any.
while you're checking that, we'll talk about something that's not in the early stages of a rally, and that's QQQ.
Yeah.
That is our fifth chart, fifth and final for
All right.
now chart. That we saw Qs fall obviously and down 20% from that February 540 high. Give four consecutive sell signals on its default chart and show a pretty consistent support level, one box higher than that trend line.
Right.
And then it gave another sell signal slightly higher than the low, just another couple boxes higher than that trend line. But that trend line definitely, I mean, when we were looking at that thing in 540, it's like there's no way we're ever going to get to that trend line. Well, we did.
Right.
It just wasn't at 370 by that point. It was at 420 by the point that we actually kind of got down toward it, right? But we bounced right off and rallied vertically higher in a column of X's from the 430 mark in April all the way up to 530 with market movement today on Thursday. We are one box away from matching the all-time highs for QQQ.
Isn't that crazy?
It is insane. I mean, Q only up 3%. It's not Poland up 44%.
Right.
But up positive on the year. I mean, if you asked me about that, I mean, maybe a month ago, I probably would have said it was going to get back there. But in mid-April, things did not look nearly as good.
Right.
And I think that just speaks to trend line held. We're back in above a 4 fund score for QQQ. Yeah, I mean it's a notable stem, but it's definitely an improved picture.
Well, and this is one of those instances where, again, not to draw comparisons to Poland because it's certainly not, but you are up on a bit of a stem. You would say, if you're looking for a bearish talking point here, we don't have traditional support until around 430, which is just above that bullish support line down below. So that is maybe perhaps a little bit of a concern.
Well, it wouldn't be the end of the world to see some consolidation, right? If we got a little pullback to the $480-ish mark, which is around that 50-day or 10-week moving average. Also, I mean, maybe not at that point, but in the low 500s, upper 400s, that would make sense for consolidation.
Yeah. You
If
took
we,
the words right out of my mouth, Ian. I
sorry,
said it
sorry,
myself.
I was,
I'm kidding.
yeah. And I don't think we have to break through to new all-time highs before we get there. That's kind of the talk. Like, can we go straight up and make new all-time highs? Honestly, if we did that, I would maybe be a little bit more concerned
Right.
than if we got some consolidation below those
Yeah.
all-time highs.
Give us something to work off of.
Push above, give us support below it.
Yeah.
We finally push above. Then if we get a reversal after the fact, we're not falling straight down.
Right. No,
Right.
yeah, I agree. I mean, if we got all the way up there, it would almost feel like markets were really just trying to get to that point.
Here we go again.
Yeah, exactly. Them just like falling right out of it because that was the thing. We reached new all-time highs. Versus, like you said, you get a little bit of consolidation, you get some support in there, you give markets and bulls a place to retreat to if needed. And then you go and attack that stuff a little bit more refreshed. I think that's probably a better game plan. But
Hopefully.
who knows, right? Markets never actually do it.
Markets never do what we think they should do.
What you think they should do,
Yeah,
what,
and
what you want them to do,
and
right?
that's why we have charts and indicators and stuff to continue to keep an eye out. And a great way to keep an eye on all of that is through the research hub.
There you go. Tie it back to
Tie it all back together. So now, any update on Broadcom? We can leave the people with something right before.
Yeah, it looks like
By this point, they would have already seen
you
everything.
already would have seen it, so maybe I'm wrong here.
We're seeing some flat action.
Yeah, they were down when I checked. I was a little concerned because they were off about 2.5, but now they're about back to flat. Excuse me.
Well, we can see what happens over I'm sure the earnings call will lead to some interesting conversations.
And if it does, it'll show up on the chart.
It will. That will tomorrow morning by the time people are listening. So, you got anything else, Miles?
No, man, it was a pleasure. Great,
Yeah.
great to be back with you.
Pleasure as always. Thanks everyone for tuning in this week for our 5 charts. Please reach out to us with any questions. DorseyWright.Nasdaq.com, NDW support at Nasdaq.com. If you want to reach out to us via email, let us know if you have a chart suggestion.
Yeah, why not?
Yeah, might as well. All right, cool. Thanks everybody. Talk to you next week.